Hi everyone. The session will start in shortly. Maybe 2-3 minutes we will wait. ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. ಸದ್ಯದಲ್ಲೇ ಸೆಷನ್ ಆರಂಭವಾಗಲಿದೆ. ಇನ್ನೊಂದು 2-3 ನಿಮಿಷ ವೇಟ್ ಮಾಡೋಣ. ಸುಮಾರು ಜನ ಜಾಯ್ನ್ ಆಗ್ತಾ ಇದ್ದಾರೆ. ಥ್ಯಾಂಕ್ ಯು. ಹಾಯ್ ಎವ್ರಿವನ್. ಇನ್ನು ಕೆಲವೇ ಕ್ಷಣಗಳಲ್ಲಿ ನಮ್ಮ ಇಂದಿನ ಕಾರ್ಯಕ್ರಮ ಆರಂಭವಾಗಲಿದೆ. ದಯವಿಟ್ಟು ಲೈನಲ್ಲಿ ಇರಿ. ಹಾಯ್ ಎವ್ರಿವನ್. ಸೆಷನ್ ವಿಲ್ ಸ್ಟಾರ್ಟ್ ಇನ್ ನೆಕ್ಸ್ಟ್ 2-3 minutes. Please be on the line. ಹಾಯ್, ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. ದಕ್ಷಿಣ ಕನ್ನಡ ಪದ್ಮಶಾಲಿ ಸಮಾಜ ಸೇವಾ ಕೂಟ ಬೆಂಗಳೂರು ಇದರ ಆಶ್ರಯದಲ್ಲಿ ಕೂಟದ ಟ್ರೈನಿಂಗ್ ಅಂಡ್ ಡೆವಲಪ್ಮೆಂಟ್ ಉಪಸಮಿತಿಯ ಮುಂದಾಳತ್ವದಲ್ಲಿ ಆಯೋಜಿಸಿರುವ ಇಂದಿನ ಕಾರ್ಯಕ್ರಮ ಟ್ಯಾಕ್ಸ್ ಪ್ಲಾನಿಂಗ್ ಫಾರ್ ದ ಬೆನಿಫಿಟ್ ಆಫ್ ಸ್ಯಾಲರಿಡ್ ಕ್ಲಾಸ್ ಕನ್ಸಲ್ಟೆಂಟ್ ವಿಷನರಿ ಎಂಟರ್ಪ್ರೈಸಸ್ಗೆ ಬೆಂಗಳೂರು, ಮಂಗಳೂರು, ಮುಂಬೈ ಮತ್ತಿತರ ಊರುಗಳಿಂದ ಆನ್ಲೈನ್ ಮುಖಾಂತರ ಜಾಯ್ನ್ ಆಗಿರುವ ತಮಗೆಲ್ಲರಿಗೂ ಆತ್ಮೀಯ ಸ್ವಾಗತ. ಇಂದಿನ ಈ ವಿಶೇಷ ಕಾರ್ಯಕ್ರಮವನ್ನು ನಡೆಸಿಕೊಡಲು ನಮ್ಮ ಸಮಾಜದ ಪ್ರತಿಭೆ ಹಾಗೂ ನಿಮ್ಮೆಲ್ಲರ ನೆಚ್ಚಿನ ಸದಾ ನಗುಮುಖದ ಮತ್ತು ಕಳೆದ 3 ವರ್ಷಗಳಿಂದ ನಮ್ಮ ಕೂಟದ ಖಜಾಂಚಿಯಾಗಿ ಕಾರ್ಯನಿರ್ವಹಿಸುತ್ತಿರುವ ಶ್ರೀ CA ವಿಶ್ರಾಂತ್ BL ಅವರನ್ನು ಈ ಕಾರ್ಯಕ್ರಮಕ್ಕೆ ಆತ್ಮೀಯವಾಗಿ ಸ್ವಾಗತಿಸುತ್ತಾ ಶ್ರೀ ವಿಶ್ರಾಂತ್ ರವರ ಕಿರು ಪರಿಚಯವನ್ನು ನಿಮ್ಮ ಮುಂದೆ ಪ್ರಸ್ತಾವಿಸುತ್ತಿದ್ದೇನೆ. ಶ್ರೀ ಲಕ್ಷ್ಮಣ್ ಶೆಟ್ಟಿಗಾರ್ ಮತ್ತು ಶ್ರೀಮತಿ ವಿಮಲಾ ದಂಪತಿಗಳಿಗೆ ಮಗನಾಗಿ ಉಡುಪಿಯಲ್ಲಿ ಜನಿಸಿದ ಶ್ರೀ ವಿಶ್ರಾಂತ್ ರವರು ಕೇರಳದ ಮಂಜೇಶ್ವರ ಭಾಗದಲ್ಲಿ ಬೆಳೆದು ಮಂಗಳೂರಿನ ಸೇಂಟ್ ಅಲೋಷಿಯಸ್ ಕಾಲೇಜ್ ಮತ್ತು SDM ಕಾಲೇಜ್ ಆಫ್ ಬಿಸಿನೆಸ್ ಮ್ಯಾನೇಜ್ಮೆಂಟ್ ಅಂತ ಪ್ರತಿಷ್ಠಿತ ಸಂಸ್ಥೆಗಳಲ್ಲಿ ವ್ಯಾಸಂಗ ಮಾಡಿ ನಂತರ ಬೆಂಗಳೂರಿನಲ್ಲಿ ತಮ್ಮ ಚಾರ್ಟರ್ಡ್ ಅಕೌಂಟೆಂಟ್ ಆರಂಭಿಸಿ ಚಾರ್ಟರ್ಡ್ ಅಕೌಂಟೆಂಟ್ ಆಗಿ ತಮ್ಮ ಅರ್ಹತೆಯನ್ನು ಪಡೆದ ತಕ್ಷಣ ಓನ್ ಪ್ರಾಕ್ಟೀಸ್ ಇಂದ ಪ್ರಾರಂಭಿಸಿದವರು. CA ವಿಶ್ರಾಂತ್ BL ರವರು 2012ರಿಂದ ಇನ್ಸ್ಟಿಟ್ಯೂಟ್ ಆಫ್ ಚಾರ್ಟರ್ಡ್ ಅಕೌಂಟೆಂಟ್ಸ್ ಆಫ್ ಇಂಡಿಯಾ ICAI ನ ಸದಸ್ಯರಾಗಿದ್ದು ವಿಶ್ರಾಂತ್ ಅಂಡ್ ಕಾರ್ತಿಕ್ ಚಾರ್ಟರ್ಡ್ ಅಕೌಂಟೆಂಟ್ ಸಂಸ್ಥೆಯ ಸಂಸ್ಥಾಪಕ ಪಾಲುದಾರರಲ್ಲಿ ಒಬ್ಬರಾಗಿರುತ್ತಾರೆ. ಈ ಸಂಸ್ಥೆಯು ಪ್ರಸ್ತುತ ಬೆಂಗಳೂರಿನಲ್ಲಿ ತನ್ನ ಕೇಂದ್ರ ಕಚೇರಿಯನ್ನು ಹೊಂದಿದ್ದು ಮಂಗಳೂರು ಮತ್ತು ಹೊಸೂರಿನಲ್ಲಿ ಶಾಖೆಗಳನ್ನು ಹೊಂದಿದೆ. ಶ್ರೀ ವಿಶ್ರಾಂತ್ ರವರು ICAI ನೀಡಿದ ಸರ್ಟಿಫಿಕೇಶನ್ ಇನ್ ಕಾಂಕರ್ಡ್ ಆಡಿಟ್ ಆಫ್ ಬ್ಯಾಂಕ್ಸ್ ಮತ್ತು ಡಿಪ್ಲೊಮಾ ಇನ್ ಇನ್ಫಾರ್ಮೇಶನ್ ಸಿಸ್ಟಮ್ ಆಡಿಟ್ DISA ಪದವಿಗಳನ್ನು ಕೂಡ ಹೊಂದಿರುತ್ತಾರೆ. ಪ್ರಸ್ತುತ ಕರ್ನಾಟಕ ರಾಜ್ಯ ಚಾರ್ಟರ್ಡ್ ಅಕೌಂಟೆಂಟ್ ಅಸೋಸಿಯೇಷನ್ ನ ತಂತ್ರಜ್ಞಾನ ಸಮಿತಿಯ ಅಧ್ಯಕ್ಷರಾಗಿರುವ ಶ್ರೀ ವಿಶ್ರಾಂತ್ ರವರು ಆಗಲೇ ತಿಳಿಸಿದಂತೆ ನಮ್ಮ ಬೆಂಗಳೂರು ದಕ್ಷಿಣ ಕನ್ನಡ ಪದ್ಮಶಾಲಿ ಸಮಾಜ ಸೇವಾ ಕೂಟದ ಖಜಾಂಚಿಯಾಗಿಯೂ ಸೇವೆ ಸಲ್ಲಿಸಿದ್ದರಲ್ಲದೆ ಕಾಪು ಮಾರಿಗುಡಿ ಅಭಿವೃದ್ಧಿ ಸಮಿತಿ ಬೆಂಗಳೂರು ಇದರ ಖಜಾಂಚಿ ಹುದ್ದೆಯನ್ನು ಕೂಡ ಹೊಂದಿರುತ್ತಾರೆ. ಟೀಚಿಂಗ್ ಅನ್ನು ಹವ್ಯಾಸವಾಗಿ ಹೊಂದಿರುವ ಶ್ರೀ ವಿಶ್ರಾಂತ್ ರವರು ಪ್ರಸ್ತುತ ಸ್ನಾತಕೋತ್ತರ ವಿದ್ಯಾರ್ಥಿಗಳಿಗೆ ಅಕೌಂಟೆನ್ಸಿ ಮತ್ತು ಟ್ಯಾಕ್ಸೇಷನ್ ಕ್ಷೇತ್ರಗಳಲ್ಲಿ ಬೋಧನೆ ಮಾಡುತ್ತಿದ್ದಾರೆ. ಅಲ್ಲದೆ ಇವರು ಟೆಕ್ ಫಿನಾನ್ಸ್, ಟ್ಯಾಕ್ಸೇಷನ್, ಬಿಸಿನೆಸ್ ಸೆಟಪ್, ಕಾಂಪ್ಲೈನ್ಸ್ ಮ್ಯಾನೇಜ್ಮೆಂಟ್ ಅಟ್ ವೇರಿಯಸ್ ಪ್ಲಾಟ್ಫಾರ್ಮ್ಸ್ ಲೈಕ್ ಬಿಸಿನೆಸ್ ಫಾರಂ, ಕಾಲೇಜ್ ಎಕ್ಸೆಟ್ರಾ ಇದಕ್ಕೆ ಸೂಕ್ತ ಸಲಹೆ ಮಾರ್ಗದರ್ಶನ ನೀಡಬಲ್ಲ ಒಬ್ಬ ಸಂಪನ್ಮೂಲ ಕೂಡ ಆಗಿರುತ್ತಾರೆ. ಇಂತಹ ವಿಶೇಷ ಪರಿಣತಿ, ಜ್ಞಾನ ಮತ್ತು ಕ್ವಾಲಿಫಿಕೇಶನ್ ಹೊಂದಿರುವ ನಮ್ಮ ಸಮಾಜದ ಶ್ರೀ ವಿಶ್ರಾಂತ್ ರವರು ಇಂದಿನ ಈ ತರಬೇತಿ ಸೆಷನ್ಗೆ ಸ್ಪೀಕರ್ ಆಗಿ ಬಂದಿರುವುದು ನಮ್ಮ ಅದೃಷ್ಟವೇ ಸರಿ. CA ವಿಶ್ರಾಂತ್ BL ರವರಲ್ಲಿ ಇಂದಿನ ಈ ಸೆಷನ್ ಅನ್ನು ನಡೆಸಿಕೊಡಲು ಈ ಮೂಲಕ ವಿನಂತಿಸುತ್ತೇನೆ. ಓವರ್ ಟು ಯು ಮಿಸ್ಟರ್ ವಿಶ್ರಾಂತ್. ಥ್ಯಾಂಕ್ ಯು.
ಧನ್ಯವಾದಗಳು ಮಾಧವಣ್ಣ. ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. ನನ್ನ ಪರಿಚಯ ಕಿರು ಪರಿಚಯದಿಂದ ದೊಡ್ಡ ಪರಿಚಯ ಆಗೋಯ್ತು ಅಂತ ನಾನು ಅನ್ಕೊಳ್ತಾ ಇದ್ದೇನೆ. ಇನ್ನು ಜಾಸ್ತಿ ಟೈಮ್ ಅನ್ನು ವೇಸ್ಟ್ ಮಾಡದೆ ಇವತ್ತಿನ ಟಾಪಿಕ್ ಟ್ಯಾಕ್ಸ್ ಪ್ಲಾನಿಂಗ್ ಇದ್ರ ಬಗ್ಗೆ ನನ್ನಲ್ಲಿ ಏನು ನಾಲೆಜ್ಗಳಿದೆಯೋ ಅದನ್ನ ನಿಮ್ಮ ಜೊತೆ ನಾನು ಶೇರ್ ಮಾಡೋದಕ್ಕೆ ಇಷ್ಟಪಡ್ತೇನೆ. ಈ ಸೆಷನ್ ಅಲ್ಲಿ ಸಾಧ್ಯವಾದಷ್ಟು ಕನ್ನಡವನ್ನು ಬಳಸಲಿಕ್ಕೆ ನಾನು ಪ್ರಯತ್ನ ಪಡ್ತೇನೆ. ಆದ್ರೆ ಟ್ಯಾಕ್ಸ್ ಪ್ಲಾನಿಂಗ್ ಅನ್ನೋದು ಒಂದು ಈ ಸಬ್ಜೆಕ್ಟ್ ಅಲ್ಲಿರುವಂತಹ ವರ್ಡ್ಸ್ ಇಂಗ್ಲಿಷ್ ಅಲ್ಲಿ ಇರೋ ಕಾರಣ ಮೋಸ್ಟ್ ಆಫ್ ದ ಟೈಮ್ಸ್ ಐ ಮೇ ಬಿ ಸ್ಪೀಕಿಂಗ್ ಇನ್ ಇಂಗ್ಲಿಷ್. ಸೊ ಹಾಗಾಗಿ ದಯವಿಟ್ಟು ಅದರ ಬಗ್ಗೆ ಕ್ಷಮೆ ಇರಲಿ. ಫಸ್ಟ್ ಆಫ್ ಆಲ್ ಐ ವುಡ್ ಲೈಕ್ ಟು ಥ್ಯಾಂಕ್ ದಕ್ಷಿಣ ಕನ್ನಡ ಪದ್ಮಶಾಲಿ ಸಮಾಜ ಸೇವಾ ಕೂಟ ಬೆಂಗಳೂರು ಈ ಅಪರ್ಚುನಿಟಿ ಕೊಟ್ಟಿದ್ದಕ್ಕಾಗಿ. ಆಸ್ ಎ ಚಾರ್ಟರ್ಡ್ ಅಕೌಂಟೆಂಟ್ ಈ ಬಜೆಟ್ ನಿಮ್ಗೆ ಗೊತ್ತಿದ್ದ ಹಾಗೆ 2 ದಿವಸ ಮುಂಚೆ 1 ಫೆಬ್ರವರಿ 2022ಕ್ಕೆ ಬಜೆಟ್ ಮಂಡನೆ ಆಯಿತು. ಈ ಬಜೆಟ್ ಡೇಸ್ ಅಲ್ಲಿ ತುಂಬಾ ಬ್ಯುಸಿ ಇರ್ತೀವಿ ಜನರಲ್ ಆಗಿ. ಸೊ ದಿಸ್ ಅ ಲಾಟ್ ಆಫ್ ಟೈಮ್ ಸ್ಪೆಂಟ್ ಆನ್ ಬಜೆಟ್ ಅನಾಲಿಸಿಸ್. ಸೊ who loses, who benefits from the budget. So in fact, this is the same thing for many years now. When 1st February 2024 arrived, we had the same expectation. But our finance minister, Nirmala Sitharaman madam, had some different ideas. Just to quote her words, which is related to taxation, She says, I quote, I do not propose to make any changes relating to taxation and propose to retain the same tax structure for direct taxes, indirect taxes, including import duties, unquote. So this means that she want to keep it as simple as it was earlier. So there's nothing to new to think about, new to discuss. So we are free now. That's why I'm here as a resource person to address you all. On a similar note, as a citizen of this country, we need to plan our finances. ಸೊ ನಮ್ಮಲ್ಲಿರುವಂತಹ ಈ ಹಣವನ್ನು ಎಷ್ಟು ಪ್ಲಾನಿಂಗ್ ಮಾಡಿ ಖರ್ಚು ಮಾಡ್ತೀವೋ ಅಷ್ಟೇ ಉಳಿತಾಯ ಮಾಡುವಂತಹ ಒಂದು ಸಂದರ್ಭ ನಮಗೆ ಬರ್ತದೆ. ಸೊ ಈ ಫಿನಾನ್ಸ್ ಅಂದ್ರೆ ಟ್ಯಾಕ್ಸ್ ಕೂಡ ಒಂದು ಪಾರ್ಟ್, ಕರೆಕ್ಟ್ ಅಲ್ವಾ? ಸೊ ಟ್ಯಾಕ್ಸೇಷನ್ ಇಸ್ ಒನ್ ಆಫ್ ದ ಮೇಜರ್ ಪಾರ್ಟ್ ಇನ್ ಫಿನಾನ್ಸಸ್. It is something like what you can say, a penny saved is always a penny earned, right? So we save our taxes within the guidelines, we can manage our finance in a better manner. So that is what we are going to discuss, or probably we'll interact with each other in this session. Just for the information of the audience, let me tell you that we will have this all the questions related to the question will be taken up at the end of the session. So I will complete the session which is planned, maybe a 45 minutes to 1 hour. Post to that, we will have probably 20 minutes to 30 minutes of time of handling the questionnaires. Meanwhile, there is question, I think forms are already available on the portal. You can punch in your questions so that I can take it up in the end of the session. So let me just first share the screen. So I believe everyone has got the access to the screen. Can anyone confirm?
Yes.
Yeah, thank you. Right. So today, the entire session is directed towards the benefit of, as it's stated there on the screen, it is visionary entrepreneurs, consultants, and salary class. So I have been taking classes where, or maybe sessions, I would say, which is more focused on the salary class. There is a lot of things which we've discussed on the salary class. But when DKPSSK officials came up to me for a session, I said, let's make it a little more different this time. Bring in this new businessman, because India as a whole is moving towards more of an entrepreneur mindset than being a salary mindset. So why not bring in the tax aspects which is beneficial, or which can help the entrepreneurs to think over it and bring some businesses into this economy and make good for the country. So that is where my entire object was, to direct it to visionary entrepreneurs, consultants who are there in the service sector, and of course not to leave salary class, of course. So let's moving further, let me tell you what we cover today. So the content of today's discussion will be on new scheme versus the old scheme, which everyone has a question on. And we discuss on under a salary income, what are tax planning possible. Then we will also discuss on the house property. I think there's one small typo error there. Then we talk about the capital gain income. Then we talk about the business and professional incomes. 80 deduction, section 80, it's a very famous deduction section. Then we have the advanced tax and TDS. So where does the tax planning flux here? That is what we are going to discuss. We have also have a discussion on the carry forward and set off of losses. So how the tax planning happens here. And I also would like to touch upon a few concepts related to non-residents, where they can do a bit of tax planning. And probably at the end of the day, if the term permits, I would also take up one additional topic, which I will reveal at the end of the session. Okay. So moving to the first one, new scheme versus old scheme. So there's been a lot of confusion, especially in the salary sector, I would say, whether I should go for a new scheme, old scheme. Let me come and tell you where is the scheme is coming from and what was the intention. So the main idea behind today's session is just to find out where is it, what is the scheme is all about, how it is different, how the new scheme is different from the old scheme, and who should opt for it. So these are all the basic aspects which we'll touch upon. So the new scheme was introduced in the last year of budget, where Madam Nirmala Sitharaman has come out with a scheme where you don't get most of the exemptions and deductions. India has been there in a tax structure where people were kind of forced to do a lot of deductions and exemptions related investments. Maybe it is an LIC, or maybe it's a NPS or PPF. So all these investments were done with the intention of most of the time to get the taxes reduced. But in spite of all these things, Madam has introduced a new scheme which more talks about lesser of tax value and not intending the investment portion. So I will not touch upon what is the tax rates and all here, because anyway it's available. Even a simple googling you will find out what is the tax rates. But the intention behind is to help the lower sector. So something like if you are there in a tax bracket, or I would say income bracket of let's say 15 lakhs or below, you can always think, or you should at least make an effort to understand and analyze whether the new tax scheme will help you or not. So that is what is the intention of the law is to help the people who has got a taxable income of 15 lakhs and below should always look for the new tax regime wherein they can make the best use of their taxes, and probably they will end up paying lesser taxes in comparison to old schemes. Somebody who has got more than 15 lakhs of income, it's very rare that they wouldn't have done any investments. So getting into the new scheme and trying to find out whether it's suitable will be a very remote chance for a person with 15 lakhs. So that is where your entire analysis or opting mechanism should be, that if your salary or if your total income is below 15 lakhs, always think of checking whether the new tax regime helps to you. In the new tax regime, up to 7 lakhs, if your income is up to 7 lakhs, availing, there's something called as a relief under section 87A. So by taking this benefit up to 7 lakhs, you can make your taxes nil. So of course, this is only 5 lakhs when it comes to the old scheme. So these differences are there. But what happens if you go for the new scheme? If you go for the new scheme, you will miss out on some very important deductions which you will get it under the new old scheme. That is to name one is the HRA. HRA is very famous especially in the salary sector. So as soon as you have an HRA in your salary structure, you would like to claim a tax advantage. So this probably you will miss if you're there in a new scheme. And there are a lot of 80 section deductions like ATC, ATD, ATE, or ATE. All these sections will not be applicable for you if you go for a new scheme. So be aware of that. Interest on housing loan, very important concept, because whoever has got interest on housing loan, that is when somebody who has availed the housing loan would like to avail the tax benefit on the interest portion as well as the principal. So that is what you will miss if you go for a new tax regime. So be mindful of these aspects when you choose new tax regime. And when you say about the generations, probably the young generations who don't have, let's say, much of obligations can also opt for the new tax regime. Probably the approach should be something like, I don't want to invest much on, let's say, an NPS scheme or a PPF or an LIC or something. I want to live today. That's what I would say the concept should be. So if you're a person who is living for today, the new scheme is there for you. Somebody who thinks of the future, the old scheme is there. So now let's talking about how the shifting from new schemes to old scheme or the other way it happens. So as if you're a salaried person, so you have infinite number of times when they can shift from old to new, new to old based on whatever investments or incomes you have. But if you're a non-salaried person, you can switch from old scheme to new scheme once, and you can come back to old scheme only once in lifetime. So be careful when you're switching between the schemes, because every year, as a non-salaried person, every year you cannot do the switching. So this is some aspects I thought I better share it with you, which will help you in terms of choosing the old scheme and the new scheme. Moving to the next topic, the very famous one is the salary income. So being a salaried person, earning salary income, how can I save the taxes? There are multiple aspects involved, but I'll touch upon few aspects. So I have made some key notes of 6 aspects which I will narrate today. The first one being structuring of your salary. I believe everyone, whoever gets into an employment, initially gets an appointment letter with the salary structure, which will narrate what is basic, what is DA, what is HRA, what is LTA. So there are so many things follows, right? The first and foremost thing when you get this into your hands, you should look for is how much of my structure is in line with my tax planning mechanism, because the allowances which is noted there, all the allowances does not help you to save the taxes. So when you get a salary structure, make a habit of discussing with your employer and make the salary structure more suitable for tax planning. Now, what allowances can come under the tax planning? There are allowances like HRA, LTA. So you have some allowances of uniform. So you have reimbursement sometimes coming in. If you're seeing very carefully in your salary structure, there's something called reimbursements. So reimbursement towards, let's say, books and periodicals, telephone. So these aspects will help you to save the taxes. So just accepting the salary structure as given by your employer will not help you to save taxes. It has to be sometimes restructured to help to save taxes. So be mindful about what is the structure of your salary, which will help you to save a lot of money in terms of taxes. Okay, so this is the first concept. The second one is claiming HRA and home loan. So there is always a confusion. If I'm staying in a rented house, I also have a new own house and have a loan on those house. Can I claim HRA and home loan? So So let me make it a little clear in this aspects. Yes, you can claim both HRA as well as the interest portion on the home loan or principal portion on the home loan. But there are few conditions which income tax, not as per sections, but as per the rules or the case laws provided, derive from. So there are few points to note here. Is one is, if you're staying in a rental premises, you must stay in a rental premises for the sake of your employment. For example, if let's say I have a own house in Bangalore wherein there is a home loan, and I am at Bangalore for my employment purpose, I stay at a rental premises. Now, I have an option of claiming both HRA because I am staying in a rented house in Bangalore. I can also claim the benefit of interest on home loan as well as principal portion. The entire crux here is you should be able to prove that I had to take the rental premises because of my employment. If both the premises happen to be at the same place, let's say both are there in, let's say, Banshankari of Bangalore. My own house is in Banshankari, my rented house is also there in Banshankari of Bangalore. So you will not be allowed to give any, you're not allowed to take the benefit of both the sections. So be careful with this aspects when you claim both HRA as well as interest on home loan. So this kind of a mechanism of helping in terms of home loan matters the most. There's one more concept here which I would like to narrate. When you claim HRA as well as interest on home loan, there's some concept called as notional rent on the home loan, which you must be aware of. If you are claiming any kind of interest on home loan as a self-occupied property, then there is a cap of 2 lakhs of interest which you can claim as deduction. If you can plug in your self-occupied property as, or convert your self-occupied property as a let out property, and say that there is a rent which you can showcase. This will result in a higher claim of interest on housing loan. So you can plan your housing loan deductions in terms of interest in such a manner that home loan deductions maximizes by converting a particular premises from self-occupied to let out. So this planning also can be done. Now touching on the third aspects, that is on the LTA, the leave travel allowance. Now, what is leave travel allowance? Leave travel allowance means you have an option of claiming the tax exemption once in 4 years, two times. That is, there is a block called 4 years. The current running block is 2022 to 2025. So in this block of 4 years, you can claim two times for or against the travels which you have done. So this block of 4 years for the travels. Now, what do you mean by travels? The travel includes any kind of leisure tours which you have done along with your family. So when you say family, it is self, spouse, children, parents, siblings. So these all covered. So if you go along with these family members to any particular place, you can submit these bills to your employer and claim the tax exemption against the LTA. But very, very important factor here, if you want to claim the LTA, the leave travel allowance component must exist in your salary structure. So be mindful of this particular aspect. Coming to the fourth note, furnishing tax declarations and documents. I believe if you're a salaried person, during the month of April, that is the beginning of the year, your employer will ask for a declaration through an online form or an offline form, wherein you have to say, these are the things I invest on. Subsequently, that coming January, they will ask you for the documents. Now, what I see in most of my client places is employees declare something, I would say, let's say 100 rupees worth of things. And when they submit the document in the month of January, they submit only 80, 70, 60, 50%. Now, this is the biggest mistake you're doing. So that's why I'm saying you plan your investment well in advance, right in the front of first month of your year, so that you don't miss on collecting the related documents. So plan well, declare what is possible for you to invest on, accordingly submit the documents in the month of January. If in case you've missed to do that, I believe everybody know what is the impact. You will be paying higher TDS. There's some clients which were, or in fact, salaried people who have come back to me saying that February and month my TDS deductions has gone twice or thrice of my regular TDS. Why? Because you declared something in the month of April, but you did a documentation submission to the extent of half of the things. So please ensure that your declaration matches to the document submission. So plan in advance. Coming to the next aspect, exploring being the consultant. This is more evident for a place like Bangalore, I would say. The reason being the consultant mechanism is more beneficial in terms of taxation rather than salary. I will tell you how it works. If you go to the startup industries in especially in Bangalore, an option is given to you whether you want to be an employee or whether you want to be a consultant on role. So as an employee, you know what you can claim it as tax deductions, how much of taxes comes to you. But if you have given an option to become a consultant rather than an employee, I would always tell you go with that. The reason being, let's say as a consultant, if you earn 1 lakh per month, there is a straight deduction of 50% on your income. That is straight away your taxation will come only on 50,000 per month. So if you talk in terms of annually, instead of 12 lakhs, you will be paying taxes on 6 lakhs. Imagine you have 6 lakhs of taxable value probably after reducing all your investments like LIC and all this stuff, probably it will come all the way to 5 lakhs. There is no tax to pay. So being a consultant earning 12 lakhs in a year, you may not be paying any taxes. But imagine a value of 12 lakhs as a salary, you are for sure will be paying something or the other as taxes, and your employer will be doing TDS. So explore the option of being a consultant rather than an employee. So this is the one more note which I would like to say. Choose the tax scheme wisely. I think I have narrated in the first instance. So you should be very, very careful with which scheme you choose. Here, one aspect I want to add it here. When you select a particular scheme, whether it's an old scheme or a new scheme, you have to stick to that scheme as far as your employer is concerned. That means employer will never change in between the year the scheme for you. So if you choose new scheme in the month of April, for the entire year your taxation will happen or TDS will happen as per the new scheme. So be wise in choosing the scheme. Do all the mathematics in the beginning of the year itself and choose the scheme accordingly. So this is on the salary aspects. Moving to the house property thing, I think most of the people has got house property incomes, rental incomes, or they must be having at least loan on self-occupied property. There are a couple of points I would thought I will put it here. One is always if you are as a family person buying a property and taking a loan, plan for joint ownership. I say joint ownership and home loan. Okay, it's not only joint home loan, it is joint ownership as well as home loan. Now, what is the benefit here? Imagine you have taken a loan, okay, wherein the total EMI for that particular year comes to, let's say, 10 lakhs or something like that. So now we go back to the income tax regulations. What does it say? It says is interest on housing loan of a self-occupied, you can claim maximum 2 lakhs. And principal portion, you can claim maximum 1.5 lakhs under the section section 80, that is chapter 68 deductions, correct? So what is the total amount? 1.5 plus 2, it is 3.5. If you are able to get the loan in joint and ownership and a joint loan, both husband and wife, if you are employed, both can claim the same benefits. That is 2 lakhs plus 2 lakh, 1.5 lakhs plus 1.5. So what is your total deduction as a family? It's a big amount of 7 lakhs. So if you are there in a 30% bracket, so we are planning for a saving of 2.1 lakhs straight away in terms of taxes. So ensure that the joint ownership of particular property, self-occupied properties are always exercised. The second concept is on the let out. So I think I explained this when I explained the salary also. Wherever it is possible, as much as possible, wherever you have a self-occupied property wherein you have taken a loan, if you can convert it to a let out property, show a notional rate of rent. What is notional rate of rent? A rent which is prevailing in that particular location. You can show it as income. Against that, you can claim the housing loan interest to the unlimited extent. That means to say you don't have the cap of this 2 lakhs. So wherever it is possible, let out property should be displayed instead of self-occupied, where you can claim the benefit of interest on housing loan to the unlimited extent without any cap of 2 lakhs. So keep note of these two aspects whenever you are paying taxes on your house properties, right? Moving to the next concept, capital gain. So capital gain means there should be a capital asset. So what is capital asset? Capital asset can be stocks, shares, mutual funds, your immovable properties, that is your house or site and all these things. All this constitute of capital assets. So if you do any sale of this capital assets, there is a gain which is coming out. That means nothing but what is the sale value minus the purchase cost. Whatever the profits you get, it is called as capital gains. So capital gain will be taxed as per the income tax regulations. So what concepts of tax capital gain will help you to save taxes? The first one is tax harvesting. I think most of the people here are nowadays into equity trading. At least you will have something called, a Grow app or a Zerodha app, where you will do a lot of trading on a daily basis, weekly basis, monthly basis. Now, when you're doing this, the one concept which you should aware of, there's something called long-term capital gain and short-term capital gain. So if you're holding the shares for a year or so then it will become a long-term capital gain. Now, there is one beautiful concept which is brought in by the finance ministry on stating that long-term capital gain up to 1 lakh is exempt from taxation. Anything over and above 1 lakh will be taxed at 10%. Now, how we can use this mechanism to save the taxes? Imagine you have been purchasing some in equity shares on a periodical basis, and those are long term. Okay, so you make a profit. Let's say if you're planning to sell it in the month of, let's say, March 2024, and you derive a profit of 1 lakh. Ideally, any profit, the tax department will ask you for a taxes on that, no? Correct? But here, since you're making only 1 lakh profit, you will not be asked to pay any tax on it because there is an exemption. Now, what you should do next? Immediately, you should do a repurchase. So if you sell it today, the same day you can repurchase the stock. Now, the difference between your purchase cost and today's selling cost, the profits of 1 lakh, that becomes a tax-free amount. The similar exercise you should keep doing it when there is a gap between your purchase price and selling price is 1 lakh. So this is how you can keep doing it year by year or once in 2 years. Sell all the long-term stocks and avail this benefit of 1 lakh exemption. So this is what the concept which we call it as tax harvesting. So make use of the provisions, save your taxes on the, especially on the long-term capital gains. One more aspect here which I want to touch upon is managing the holding period. Generally, long-term capital gains are taxed at a lower rate, or there will be a cost inflation benefit for the long-term capital gains. Eventually happens to be a lower taxation in terms of long-term capital gains. So that is the reason why I say every time, wherever it is possible, try to push your capital assets to the long-term module rather than short-term module before you sell it, so that you can save on the taxes. Coming to the other aspects of maintaining bills and records. Now, what is maintaining bills and records? This is especially applicable for an immovable property. Now, what happens generally is you must have purchased a site. You would have done some constructions of a, let's say, a residential complex or something like that. And eventually in the later years, you must have done some renovations, right? What I generally see is people don't maintain the bills and records of these expenses which they have done. If you are done of maintaining these bills, the advantage for you is tomorrow when you are selling this property, you can claim all these expenses against the sale value, and your profits will come down, your capital gain will come down, according the capital gain tax also will come down. If you do not maintain the bills and records, then you will end up paying higher taxes. So always make a habit of maintaining all the bills and records in any particular file or something, so that you don't face this paying a different difficulty situation of paying higher taxes. So be mindful of keeping the bills and records. Plan for the reinvestment. What is reinvestment? Income tax provision, there is something called a section 54 which says that if you are selling any particular property and repurchasing it, that means let's imagine you have a residential house, a small house, you want to sell it and buy a new residential house which is a bigger, right? So now what is the exemptions which is given to you is, if you sell, if you make a profit and reinvest the sum which you have received in new property, you don't have to pay any taxes. Similarly, a reinvestment need not happen only in a new residential property. It can also happen in some specified bonds. There is some called National Highway Authority bond, REC bonds. So you can do a reinvestment in this particular allowed sectors as per section 54, and you can nullify the capital gain taxes. So whenever you're selling a new selling a capital assets, always check for where I can do the reinvestment and save the taxes. So these are the few aspects I thought I will cover in capital gain income. Moving to the next one, business and professional income. Okay, so I think this is something to the benefit of the someone who is newly venturing into business, or somebody want to do a service as a consultant. So for the benefit of these people, I thought there are few points which is beneficial for them in terms of the taxation. The first one is selection of entity type, right? Now, what are the types of entities generally a businessman or an entrepreneur can set up? There's something called as proprietorship. That means you are the sole owner of everything. Then the next level comes up is partnership. When you have two or more partners coming together and forming a business setup, the easiest formation is partnership, right? And if you go to the next to the ladder, there's something called as limited liability partnerships, LLPs, what we call it as, correct? So LLPs also uh, happens to be in line with partnership, but LLPs get registered in the Ministry of Corporate Affairs. Next, moving to the next level is company. Private limited companies are there, public limited companies are there. Now, why would I say that selection of entity type matters? Because in taxation, there are different tax rates on the profits of these enterprises. For example, proprietorship, as I told in the beginning, for a proprietorship, it is as good as your own PAN. So slab rates are applicable up to 2.5 lakhs, no tax, 2.5 lakhs to 5 lakhs, 5%, 5 lakhs to 10 lakh, 20%, and above is 30%. So slab rates are applicable on the profits you derive as a proprietorship business, correct? Next, partnership firm. Partnership firm, there is no slab rates. That means to say, let's say in a year you make 1 crore sales, and your expenses related to the particular business is, let's say, 80 lakhs. So what is your profit? Your profit is 20 lakhs, right? So on 20 lakhs, straight away you pay 30% tax. So this is how the partnership firms work. Coming to the LLP, as I said in the earlier, LLP is nothing but a little glorified version of partnership firm. Therefore, again, the same 30% rule on the profit happens to be the for the LLPs too. Coming to the companies, for the private limited companies, there are different tax rates. There are 30% earlier, but now it is 25%. There are some entities which you can claim with certain conditions 22%. There are some manufacturing setups which can claim even 15% tax. With 15% tax has to be paid, only 15%. So which is much lower than even an individual, right? For the manufacturing setup. So you should be wisely choosing what type of entity you want to form. So you want to save more taxes. There is a private limited company entity. Probably a little lower down is proprietorship. LLPs and partnership firms are straightforward. It always results in 30% taxation. So choose your entity type wisely. Maintaining books of accounts. Now, what is books of accounts? Nothing but all your ledgers, like cash statements, bank book, your sales registers, purchase register. Now, how does it happen? I think everyone is aware nowadays. The basic ERP which everyone uses is Tally ERP, right? So a little moving to the next level, I think nowadays you have cloud basic accounting softwares like Zoho, or maybe real books. So these all the platforms where you can maintain your books of accounts. For maintaining books of account nowadays, you don't need a commerce language. Gone are the days when you think that, okay, I should know the golden rules of accounting of debit credit to maintain books of accounts. That must be still relevant in a tally setup. But if you go to something like Zoho Books, which is a cloud-based one, there is no debit credit. It's all works on the statement form. So being an owner, always make a habit of keep the books of accounts in particular ERP platform. Why? Because this will help you to derive what is the status of financial position and are you making profit. If you're making profit, you must be paying some taxes on that, right? If you're not aware of your financial position, how will you plan? So planning of your taxes can never be done unless you know your position. So recording is very, very, very important. In the recordings, there are a couple of concepts which I thought I will touch upon. Maintaining of regular expenses, related bills, very, very important. Just by recording the expenses in your ERP platform will not help you to save taxes. You must obtain and retain the bills or the invoices related to that. Capital assets. What is capital assets? Let's say, for example, if you're purchasing a laptop, always ensure that the laptops comes in the name of the business entity. You have the benefit of claiming depreciation. A depreciation is a wonderful tool to save your taxes again. So when you're buying any kind of capital assets, always ensure that you record the every capital purchases in the business entity name and depreciation is being claimed. Always ensure bills, very, very important. Bills should be name of the business entities. So bookkeeping is one of the good practice of a businessman to save your taxes. The third aspect which I would touch upon is presumptive taxation. So this section 44 EAD and 44 EADA, there are two sections which relates to this. So what does it say is, if you are a very small businessman, unable to maintain books of account for some reason, then what you can do is you can claim the benefit of these sections. Section 44 EAD, that is for a businessman. Section 44 ADA, that is for a consultant or a person who is providing services. Now, what is the benefit? Under section 44 EAD, what it says is, imagine you have a total sales of 1 crore in a year, right? The section says you don't have to worry about calculating or compiling how much of the expenses. Straight away declare only 8% as profit. Okay, straight away 8% of profit. That means if your turnover is 1 crore, you say 8 lakh is my profit. On 8 lakhs, you pay the entire taxes. So this is how the planning can be done. Now, under section 44 ADA, that is for the services and the consultant. How does it happen is, imagine you are a service consultant and have a total turnover of 1 crore. You are allowed to say that my total expenses is 50% of it. That is, you say my profits are only 50 lakhs. On 50 lakhs, you pay the taxes. You don't have to show the records, bills, or invoices for claiming the expenses. So this is a benefit with a limit. For example, for 44 ADA, there is a limit of 75 lakhs, and for 44 AD, there is a benefit of 3 crores. So, sorry, there's a cap of 3 crores. That means if you cross 3 crores of turnover, probably you will not be able to take the benefit of this presumptive taxation. So, but still, as long as you are there in these particular limits, you should make use of the presumptive taxation and do the better planning of your taxes. So, there's one cap line which I have mentioned here. An employee pays tax first, then pays for the expenses. Businessman first pays for the expenses, then to the taxes. I believe by this time you're very well aware that this is how it happens. So probably some people who are wondering why the businessman don't pay taxes, this is the answer. The businessman always spends first. So if something remains as profit, then only the taxation comes. But for an employee, first the tedious deductions happens, then salary comes and hits into your bank account. So if possible, become a consultant, become an engineer, become a businessman rather than an employee, at least on the perspective of taxation. Of course, the skill sets, all this evaluation are on the other side. Moving further. So section 80. Now the section 80, I would say, other way of saying is chapter 6A. There are a lot of sections under, I mean, this chapter 6A, but I will not touch upon this section 80C, 80CCC, CCI1 and all, which gives a bulk deduction of 1.5 lakhs. I think by this time most of the people are aware of what is this 1.5 lakhs contain of. So let me touch upon what is beyond 1.5 lakhs. Okay. So the first and foremost one is the section 80G, donations. So now everybody know what is the deductions for donations. There's something called 100% deduction for the donation. 50% you can claim it when you contribute towards the private trust, right? But what is the points here I want to highlight is, one is any donation if you make 2000 rupees, up to 2000 rupees only you can make it in the cash mode. Anything over and above, it has to happen in the banking mode. Very, very important. No donations should happen beyond 2000 in banking mode. So be careful with this. Sorry, in cash mode. Sorry for that. So cash mode, you can have up to 2000. Beyond 2000, it should be banking mode, or else you will not be allowed to take the deductions under the 80G, that is a donation section. What is the second aspects? Generally, people contribute towards any private trust, right, which is registered under the section 80G. Now, before you do this, always ensure that that particular trust is a registered entity. Now, how do you do it? If you simply go to the income tax department website, there is a list of exempted institutions, right? Just incorporating the PAN of the private trust, you can find out whether that's a valid trust or not, whether they hold a valid 80G certificate, right? So before you make any contributions to any of this trust, first verify, then do the payments. But if you're making payment more than 2000, do it in banking mode. Very, very important. The third very important aspect here is collect the duly stamped receipts. Very, very important, because without a receipt in your hand, you are not allowed to take the 80G exemptions. Now, what does receipt say? There are certain particulars which is defined by the law to be there on the receipt, like address of the a particular trust, or PAN number of the trust, or maybe I would say the registration number, 80G registration number. There's an acknowledgement number which they get, so that also should be there. So these are some few things which they will mention, and of course they will collect your PAN number. This is also very, very important aspect. They will collect your PAN number and they will upload the database during the month of May, that is after the completion of the year, March, once it completes, the next May they upload all this data into the income tax website, right? Once they upload this to the income tax website, it will come sit in your income tax login portal. If you are aware of something called as form 26ES or AIS reports, so you can view it, that whether you made a 80G donation or not. So this is the fourth thing which you should be very, very careful of. The 80G deductions can be claimed only when it appears in your AAS or form 26AS. I am saying it is or because income tax department has a tendency of shifting the reporting from AAS to 26AS or the vice versa. So either of the places it will appear. So ensure that before you take the 80G deductions, it appears on your portal, login portal. This is on the 80G concepts. So moving to the next section, that is 80 CCD 2. Now this is for the salaried people. So when you approach an employer for the new employment, there's something called CTC concept which they discuss on. Your CTC is 10 lakh, your CTC is 50 lakh, something like that, right? So if given an option, what you should do is in the CTC, a particular portion of it, you can allocate it saying that, ask the employer saying please contribute this X amount to NPS. Now, what is the advantage? This NPS contribution by the employer has got unlimited claim, of course, restricted to 10% of your salary. But there is no particular amount limit as far as section 80 CCD2 is concerned. That is why NPS contribution by the employer, not your contribution, NPS contribution by the employer has got an unlimited deduction to claim, restricted to 10% of your own salary. Salary means basic plus DA. I think in terms of when you talk about for government employees, the limit is 14% of the salary. So always, wherever it is possible, when you're discussing on a CTC aspect, so talk to your employer and try to get some amount contributed by him to the NPS scheme directly. Next, moving on to the 80 section 80 GG section. What is house rent deductions is related to. Now, where is this? How this can be used? This is something like a supplementary to HRA. Now, who can use it? If you're an employee who don't have HRA in your salary structure for some reason, or you are a non-salaried person and staying in a rented house. That is where section 80GG come to your rescue. Under section 80G, you can claim the exemption. There are some three, I would say conditions under which you can claim, but a minimum of I think 5,000 per month, that comes to around 60,000 per year. A straightaway deduction of 60,000 is very much possible under section 80GG if you are staying in a rented house and as an employee don't have an HRA or you are a non-salaried person. So make use of this 80GG section to claim the deductions against your housing rent. Next, coming to 80D. I think in general people are aware of 80D. That is for the health insurance premium. If you have paid, you can claim the deductions. But I also want to add on a particular concept. There's something called preventive health checkup. Okay, what is preventive health checkup? You go once in 2 months or once in 6 months to a clinic or a hospital and do a normal checkup of your health, right? So without any disease, it's a normal checkup, BP check or blood and all these things. So if you spend anything on preventive health checkup, you can claim up to 5,000 rupees. Whatever spent up to 5,000 rupees, you can claim under this section 80D section. So for example, let's say you spent health insurance premium of 15,000 rupees and preventive health checkup you have spent, let's say 3,000 rupees. 15 plus 3,000, 18,000 rupees you can claim under section 80D. So this is the advantage you have it under 80D. It is not only restricted to health insurance. There is something called as preventive health checkup, right? Next, moving to the next section, that is section 80CCD1D. Now, what is this? This is again contribution to NPS, National Pension Scheme. Okay, so now there is one point here. Of course, most of the people are nowadays contributing towards NPS and claiming deduction of 50,000 under the section, correct? But one point I want you to make you be very clear on this aspect is this contribution has to happen in something called as Tier 1 scheme. So there is something called Tier 1 scheme and Tier 2 scheme under the NPS, because I have seen people making mistakes when they take the NPS scheme. So if you are taking it under Tier 2 scheme, you will not qualify under this 80CCD1D. So be ensured that you take it under Tier 1 scheme. Point number one. Point number two, very, very important. If you are contributing anything to NPS, whether you are contributing or your employer contributing as per section 80CCD2, you cannot take back the money in anything in the near future. It is blocked up to 60 years of age. So if you have any plan of saving something for your retirement life, please contribute towards NPS and claim the deduction. So be cautious on making the contributions on NPS. Next, 80E, interest on education loan. Now, who can claim this? Any loan, any education loan, which is taken for a higher education of self or spouse or children, or very, very important aspect, a student for whom you are a legal guardian. That means you are taking care of the education of a particular student. You can still claim the deduction against the interest you pay on the education loan, which is taken for the higher education of such student. So one important aspect here is there is no limitation for the deductions. So that is the biggest advantage under the ATE. So if you are just a legal guardian of a student, you can still claim the interest on education loan. That is something which I want to stress upon. Very, very important aspects. So these are all the aspects I thought I will cover it under the section 80, that is chapter 6A, deductions. So moving to the next aspects, that is the advanced tax and TDS. I think most of the people are now aware of this concept, but what is that you will, I think I missed, okay. Okay, advanced tax I'll cover. I think there's a heading mistake, sorry. So advanced tax, I think most of the people are aware that 15th June and 15th September and 15th December and 15th March, these are the due dates for paying advanced tax. Let me tell you what is the use of paying the tax as advanced tax or TDS for that matter. Advanced tax and TDS works with the mechanism of save interest on tax. So all the way we have discussed everything on how to save taxes, right? Now, how to save interest on tax. So what does it mean? That means income tax department says if your taxable income is tax on the income is more than 10,000 rupees. Okay, this is not applicable for senior citizens. If your tax is more than 10,000 rupees in a year, then you must pay the taxes in advance. That is what is advance tax. And they said before 15th of June of a particular year, 15%, 15th of September, 45%, 15th of December, 75%, 15th of March, 100%. So this is the advanced tax due dates which is mentioned by the law. If you pay it in this fashion, so you will save the interest to be paid on the taxes. Now, what happens if you don't pay advance tax? I think some people would have experienced it. They will be filing the income tax return in the month of June and July, right? So they have to pay some self-assessment tax, right? In the self-assessment tax, if you carefully see, there is something called interest under section 234B and 234C. Now, why does it arise? It arises because you have not paid the advance tax. So if you can plan your income and the profits or the taxable incomes well in advance, and during the year, installment wise, if you're able to pay the advance taxes, very well you can save the interest under these sections. So that is very, very important in terms of advance tax. TDS mechanism. Now, advance tax and TDS mechanism both works in the similar manner. Now, what happens in TDS? You are not doing it. Someone else who is giving you income. For example, if you are a salaried person, employer is the person who is giving you an income. He will do a tax deduction at the source, that's TDS, and pay on your behalf. Again, this mechanism is also works on the same installment method of paying taxes. This also results in saving the interest which you pay it on the taxes. So this mechanism is what advanced tax and TDS is. Okay. So moving to the next one. I think there's a heading error. So this particular slide is supposed to be targeting on the non-residents. So the first thing what I want to touch upon is make use of DTAA. What is DTAA? Double taxation avoidance agreements, right? So now DTAA talks on the benefits which a non-resident can avail. Now, just small things which I have to tell you on this. Every country has an agreement with India. Okay, most of the countries, I would say, let's say US or Canada or UK or Dubai, all these countries have an agreement with India in terms of taxation, wherein they say that if one person is resident in one particular country and non-resident in another country, if he earns income in both the countries should not levy tax on the same income. That means that particular person should not be charged taxation by, let's say, Indian government as well as US government. Now this is what is this agreements will help. We call it as treaties. Okay, double taxation avoidance agreements are always called as treaties. So these treaties will help in reducing these taxes. Of course, there are some terms and conditions under which these treaties work, but still, whenever you get an income, let's say, for example, somebody is sitting in US, okay, he earns or she earns an rental income in India. She is a non-resident in India, so she earns an income, interest income, rental income, all these things in India. Now that get taxed here for sure because it is received in India. But will that be again taxed in US? No. Why? Because that is where this treaty is coming to rescue. So this is how you can get the help of DTA to reduce the taxes. Obtaining lower TDS certificates. Now this is one more concept which is very important. If you are an NRI and selling a property in India, when you sell the property in India to a resident, he is supposed to do a TDS. Generally, if there is a transaction between resident happens, the TDS is at 1%. Correct? Now, if as an NRI, if you are selling, the person who is purchasing from you is supposed to do a TDS at the rate of 22% and plus, depending on whether it's a surcharge, cess and all these things. So it varies from 22% to almost 26%. That means if you are selling a property for, let's say, 1 crore, you will only get around 75 lakhs to your account. The remaining will go and sit in your income tax account. Now, what you can do here is a simple thing of applying for lower TDS certificate. Okay. Now, what is lower TDS certificate does is, if let's say you do a capital gain calculation, I told you in the beginning, like capital gain, how does it work? So during the capital gain calculations, if okay, it happens to be that your tax on this entire transaction is, let's say, hardly 5 lakhs. Okay, on the 1 crore sale, hardly 5 lakhs is the tax comes up. That means it is 5%, right? It is not 22%. So what you can do, you can approach your assessing officer, apply for a lower TDS certificate saying that direct the purchaser not to deduct the TDS at 22 or 25%, direct him to deduct it only 5%, which is required. This will help you to save the money. A penny saved is always better, right? So instead of 25 lakhs sitting in your income tax account, only 5 lakhs, which is relevant to your taxation, sits. So please make sure of applying for lower TDS certificate. So these aspects is related to the non-resident. So carry forward and set off of the losses. This is one more aspect. So whenever you incur losses, right? Losses can happen in business. Losses can happen in a capital gain transaction. There's something called long-term capital losses or short-term capital losses. Now the beauty of it is you can carry forward these losses up to 8 years, and in the future years when you get profits, you can set off these losses and not pay any profit in the future years. Very important and very helpful for us. If you incur any losses, please don't lose hope, because at least in terms of income tax, you have an option of offsetting against the future profits, and you can make some savings in terms of taxes. So always make sure that carry forward losses happens. Now, how do you do the carry forward of losses? Simple. File your income tax return with the number, these loss numbers, within the due date. Very important. If 31st July is your due date for filing the return, file your income tax return within 31st July stating that I have business loss of, let's say, 1 lakh, or I have a long-term capital gain loss of so and so, short-term capital gain loss of so and so. Carry forward it. Next year you earn your profits, set off, don't pay any taxes. Yes. So if you have a losses, don't worry, you can carry forward and set off and make some savings in terms of at least the taxes, right? So this is on the tax carry forward and set off of the losses. So I think this we covered. And one last point which I want to touch upon is the cash transactions. This is very interesting aspects, especially after the demonetization. So there are a few aspects which I want to tell you in general. That is cash transactions. Whenever you are spending, especially as a businessman, this is more on the perspective of a businessman, expenses 10,000 rupees per day per transaction is the limit for you in terms of cash. If you spend anything over and above this, you will be called upon to pay double of that amount as penalty. That means if you pay, if you're, so it will be disallowed first of all, so under the income tax regulations, and penalty also will be levied. Next aspect is on the loan. So again, for the giving the loan or taking the loan in cash, there is a limit of 20,000 per day per transaction. So do not go beyond this. If the income tax department comes to know with the sources that there is a cash transaction happening in terms of the loan inward or outward, they can again levy the penalty double of the amount. Any other transaction, so 2 lakhs per day. So that is per person, per day per person. So that means to say, in a day, if you are doing a cash transaction of any nature, there is a maximum limit of 2 lakhs. So anything beyond that is prohibited under the income tax law. If you do it, there is penalty which is awaiting to you, if not today, tomorrow, because the income tax today has got access to most of your transactions through banking and other modes. Whether you're purchasing a particular property, whether you're doing some demat transactions, are you doing any transactions in the banks, are you booking foreign tickets, so are you applying for the visa and traveling abroad. So all these things are tracked through your PAN number. So do not assume that they are not aware of it. They are aware of it. Only thing is, when the notices will flow to you is only the time will tell. So that's why be aware whenever you're handling the cash. So I have few statistics put on digital payments. So India is faster in moving towards the digital payments. So comparing to 2017-18 financial year, so we had 2070 crore transactions happening in digital modes. Now means at least a year back. So it stands at around 12,008 crores in digital payments. So that means we are moving closely towards becoming a more of a digital payment country rather than a cash transaction. Of course, the cash entirely cannot be vanished, but still, so cash transactions can be reduced, and there are restrictions which are happening at the highest level to reduce the cash transactions in the economy. So be mindful of the cash transactions. So just to wind up on with a few notes, key notes what we learned today. So India is a country where we have mass population of around 130 crore plus, right? But only 7% of the people pay tax in India. In a country like, let's say, US, there are 45% people pay taxes. So there's a requirement as a citizen of this country to be more responsible, stand and deliver of duty with utmost care. So key points for today will be: become aware of your taxes, plan for it right in the beginning of the year. Very important, beginning of the year. The other will be, give a thought to become an entrepreneur or a consultant or a businessman from a salary class. You can manage your taxes better. And the most important is, get guided by the rules of the law and not by your intuitions. So just by a feeling of I can get this exemption, I can get this deduction, does not help you. Please read the law or connect with the person who knows the law and rightfully claim the exemption deductions and present your income tax returns to the departments. So let's be the prompt tax paying citizens and contribute towards the glory of this great nation, Bharat. Thank you, and thank you for the opportunity. And I hope I have covered the most of the aspects which I thought is untouched. So thank you again for the opportunity, and I have left my email IDs and phone numbers. So if you have any questions, specific questions, you can ask. If there are any questions placed, probably I'll have a check once. So I think there are a few questions which has come. Let me try answering it. So if you get an income from hobby of script writing, whether these are income tax. See, hobby, there's no question of hobby. If any income you get it, it's a taxable. There's nothing called exemption for hobby. So if you get an income from writing, I believe any kind of content writing will have a taxation to flow. So it doesn't depend whether it's a hobby or not. Probably in that case, people will, project it as I have a hobby of making business. So probably that will not help you. So there's one more question. Yes. Okay, let me just go through the questions. Which tax format is best suitable for a senior citizen who is wholly depending on the retirement interest income, old or new? So if it is a senior citizen and who don't have any investments and the total income is below 15 lakhs, as I said in the earlier, please go for new taxation. It will be the most beneficial. So there's no other question in that. Okay, then okay. So if you declare tax regime in between year, do we have the option to change it? I think I have answered this question. So there is, your employer will never allow you to change the tax regime. If he takes it in the month of April as new, he will continue to do the taxation in new. Of course, when you're filing the income tax return, you can change it, but you may have to explain to the income tax authority against a query why you have changed. So that the onus is on you to explain why you have changed. Okay, but still you have an option at the time of filing, but then you cannot ask the employer to change because he is not supposed to change in between the year. Can you give us some more information on the benefit under section 80, which and all investments? Probably I will share the list because the list is quite huge. I have intentionally have not covered it because first thing is there is a cap of 1.5 lakhs, and looking at the current generation, this 1.5 lakhs is a very small amount. Even if you take a housing loan, okay, principal component sometimes is big, and let's say if you have kids who are going to a school, especially a place like Bangalore, there is always a 1 lakh of tuition fee to pay. So that itself is covers your 1.5 lakhs. So there's nothing much can be planned in ATC deductions. Of course, I have covered what is beyond 1.5 lakhs. So 1.5 lakhs is a very exhaustive list, but the limit is small. Okay. So this is from Satya Prakash. I have just check once any other questions are there. There's some previous questions like from Ganpati Shettigar on reduced paid up life insurance policy taxable on maturity. I'm not very sure what exactly is reduced. I'm not aware of this reduced paid up insurance policy, but yeah, insurance policy on the maturity, there is a tax exemption is available. I'm not very much aware of the concept of what exactly is reduced. Sorry for that. Second question is one of the conditions for tax exemption on maturity amount is a basic sum assured more than 10 times of annual premium, but in some insurance policy, I'm not very well versed with this insurance thing. Sorry. So probably I will just check and probably revert you. Since you have sent through mail, I will send a reply after checking it because I am not well versed with the insurance concepts. Okay, what is the difference between the old scheme and new scheme? That's a question from Sachin. I think I have answered. Pragat has question like, what role does the proper record keeping play in effective planning, and what are the best practices? I think I have answered this. Can you provide the insight into the tax efficient investment strategies for entrepreneurs and professionals? I think many instances I have said, probably that would sufficient at least for the initial stages of your professional career. Okay, Vidyalata madam has said for the beginners how to log into IT portal, how to pay tax, claim refund, etc. Okay, so okay, so I think this is more on the process. So probably I will not be able to demonstrate how to do the registrations and pay. Just to narrate you on orally, if I have to say, now all the tax payments happens in your income tax login. There's something called Income Tax India in. So where all the tax payments happens. So earlier there was something called NSDL website for the tax payments and all. So now it is not so. If you log into your account, you pay your taxes. That is, it's very simple now. Claiming the refund. Claim refund is you file your income tax return. If the TDS which is deducted by any party who have paid your income is more than what is supposed to be, obviously you can file your income tax return and claim the refund. How to assess the tax? I'm not sure exactly what is referred as assess the tax. Assessment is self-assessment is when you file the income tax return, obviously you have to do the tax computation. That itself is called as self-assessment. Okay, point number one. Later on, there is an assessment which happens from the income tax department also based on the income limits, obviously. But yes, self-assessment is based on the tax computation. Obviously, the tax computation, there is various tools applicable, available nowadays. Even the income tax department itself gives a tax computation tool. There's a tax calculator available in the income tax department. You can plug in your numbers. It will automatically give you what taxes to pay and all. Various investments under which tax exemptions are claimed. I think I have covered that. Special benefit for the senior citizens of different age. See, senior citizens beyond 60 is called senior citizen, beyond 80 is called super senior citizen. Only tax rate benefits are there, that's it. So you have basic limit starting from 3 lakh for senior citizen and starting from 5 lakhs from super senior. So there is nothing called extra benefits which is coming up. So if you're a senior citizen, you will have only that basic limits changes. That's it. There's nothing beyond that which you get. Benefit for ladies. Unfortunately, Government of India had this earlier. There is a different slabs for men and women. Now everybody are treated at par. Minor's interest and guardian responsibility. Yes, if you have minor children, if they are earning, even if let's say bank interest or something, it will be clubbed with your income. Very careful with this aspect, because if you're trying to save your taxes or plan your taxes by shifting the FD from your account to minor kid, then it's not a good planning, because end of the day whatever interest you get, it get back to your income tax calculation and it get clubbed or added to your account. So ensure that minus income, minus whatever the income, it is your income end of the day. So do not plan any kind of tax planning in that fashion. Yes, had a question. No. Okay. I think Madhav Shtigar has asked a question. Hope there is a session for pensioners. I believe to the extent possible, I have covered here in the salary what pensioners can do. Narayan Shettigar has a question on regarding the Apartment Owners Association. I think probably I will address this in some other forum, if okay, because let's stick only to the taxation aspect. Is the filing of ITR every year is mandatory for the resident welfare associations? Yes, very much. Any person who is holding PAN, it is not only about the resident welfare associations, any person, whether it's a, when I say person, it is not individuals, it is individuals, company, LLP, private partnership firms, whoever it is. If they are earning any income over and above the basic slabs, okay, they are supposed to file their returns. So that's a simple logic. If it is a partnership firm, even if you earn 1 rupee profit, you're supposed to file your return. In fact, partnership firms are mandatorily by other laws to file the returns even if they make losses. So be careful with this aspect. Bhaskar Shettigar has asked one question type. Okay, in spite of having the investment of 1.5 lakhs, which is the better option to file that in old or new? So if you have investments, then if your income is 15 lakhs and below, make an analysis. Now, how do you do analysis? Again, go back to the income tax website, because there you have new scheme, old scheme, and it will tell you which is beneficial. So that's the beauty of income tax department website nowadays. The website itself will tell you which is beneficial, so you don't have to break your head. So just go to the department, punch your numbers, it itself will tell you which is beneficial. Accordingly, you can go. Ramakrishna had a question: can you provide your suggestions for salary employees to have appropriate components and amount that can save? So I think this I covered in the initial sector. So be careful about the salary structure, which will help you to save taxes. Yeah, I think I have covered the most of the aspects here. So in this session, so you have one more question from Pragat saying that, are there industry specific tax considerations that a freelancer should be aware of? Yes, very much. In fact, if you are a startup company, there's a lot of tax benefits available, and there are some in addition to the tax benefit, there are some aspects like you get some subsidies and all under the various regulations of the central government as well as the state government. So you can look for it. So yes, if you're a new startup company looking for benefits, not only from the perspective, even from the other industry perspective, you get some benefits here. So you can, research on that. So, but yes, there are many. In fact, latest, if I have to recall, last week sometime, gaming industries were given some budget allocation by government of Karnataka. So similar schemes are available. So please ensure that you make use of this kind of schemes of the government. So I think yeah, these are the questions which I thought yeah, I think that's all the questions.
I think we have
Anyway,
covered all the questions.
yes,
Then,
okay.
right?
Anyway, thank you for the opportunity again for Dakshinagana Padmashali Samaj Seva Kota. Of course, I am also part of it. I'm not saying no. So I hope few things. I'm very sure that I have not covered everything in detail, but I wanted to at least tell the audience that there are additional things you need to look for. Of course, you need to do a little more additional research to customize yourself whatever the benefits I have described. So ensure that you plan well and pay your taxes, but pay what is required. Don't overpay. That's all. Thank you very much.
Thank you so much, Vishranth. ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. ಈಗ ನಮ್ಮ ಈ ಕಾರ್ಯಕ್ರಮವನ್ನು ಯಶಸ್ವಿಯಾಗಿ ನಡೆಸಿಕೊಟ್ಟ ಎಲ್ಲ ಸದಸ್ಯರಿಗೆ ಅಭಿನಂದನೆ ಸಲ್ಲಿಸುವ ಸಮಯ. First of all, definitely we thank Vishranth a lot for having designed this program and executed it so well, and also for taking all the questions and answering them. So thank you so much, Vishranth. When we came up with this idea, you were very you gracefully accepted it and delivered this program. So thank you very much for that. Next, I would also like to thank ನಮ್ಮ ಅಧ್ಯಕ್ಷರಾದ ಭಾನುಮತಿ ಅವರು ಹಾಗೂ ಕಾರ್ಯದರ್ಶಿಯಾದ ಯಶಸ್ವಿ ಅವರು. ಇವರು ನಮ್ಗೆ ಯಾವಾಗ್ಲೂ ಎಲ್ಲಾ ರೀತಿಯಲ್ಲೂ ಸಪೋರ್ಟ್ ಕೊಟ್ಟು and they support us like a backbone and ensure that we are getting all the required support, bringing all the different members together. So thank you so much for your support. ನೆಕ್ಸ್ಟ್ ನಮ್ಮ ಉಪವಿಭಾಗವಾದ ಟ್ರೈನಿಂಗ್ ಅಂಡ್ ಡೆವಲಪ್ಮೆಂಟ್ ಟೀಮಿನ ಸದಸ್ಯರಾದ ಪ್ರಭಾಕರ್ ಅವರು, ರಮೇಶ್, ಟೈಟನ್ ಮಾಧವ್ ಅವರು, ರಾಮಕೃಷ್ಣ ಅವರು, ವಿದ್ಯಾಲತಾ ಅವರು, ನಿಮ್ಗೆಲ್ಲರಿಗೂ ತುಂಬಾ ಧನ್ಯವಾದಗಳು for putting this program together, for conceptualizing this program. I would also like to congratulate you for having executed this program for the very first time. And a big contributor is also our IT team, where we have Ramakrishna, Tarun, Pragat, Yashasvi, Deepak, Gajendra, Kaushik, who have enabled the IT support for this program and ensured that we are getting a very different hassle-free broadcast of this program, and also ensuring all the questions are also attended to. So thank you so much for that support. And now, last but definitely not the least, is all the audience having been a part of this program. And when I say audience, I do not only mean the Bangalore audience, because we have participants from other sanghas also, like from Mangaluru and Mumbai and others as well. So thank you very much for being a part of it and encouraging us to come up with more programs like this. So I would like to now say goodbye to everyone with a note saying that we will be back with more such programs and more such activities for you all to connect with each other. Thank you very much, everyone. Bye-bye.